Right. So are you more concerned with return on investment or return of investment, or both are important to you?
So I'm more concerned with return of investment, but the most important numbers to me would be NOI, price per unit, and cap rate, as well as cash flow.
Mathew Frederick, how you doing, brother?
Very good, very good.
Good. Excited to have you here again. The last time I was actually just looking this up. Last time you were here was like 2021. We were like in the midst of COVID.
I mean, could you imagine? That was like 4 years ago.
I know.
Very fast 4 years.
And you were talking about, what was it? Hug. Yeah. Hand me up. What was it? Generational wealth?
Exactly. For a system for older folks who are 45 to 65 to help finance younger people, because, the interest rates would be going up. And, I guess they went up.
Yeah, they went up big time. Yeah. So listen, the reason why I have you here today is I think one of the big issues that a lot of real estate investors have, whether they're experienced, but specifically if they're new, is how do they pitch their deal?
Right.
How do they find investors to believe in them, to know, especially if they're new, they don't have that track record yet, to then have that confidence to decide, hey, I'm going to invest in you, Mathew or Gary or whoever it is. And you've been doing this for a very long time. You have lots of experience. You've mentored, coached hundreds, we'll say thousands of investors, right? Huge amount of investors,
huge.
Right?
Yeah.
So, right? Trump huge. Yeah. and that's why I wanted to have you here today. I mean, you even mentored myself. You've mentored the agents that are on my team, and you're a wealth of knowledge. So I want to share what you've learned over the years, and so that other people who are trying to navigate this murky water of real estate investing, and especially in the climate that we're in today, you can show them the ropes.
Exactly.
Yeah.
Well, interesting enough, it starts with confidence.
Yep.
And it's a two-stage thing. People say to me, well, how do I get confidence in something new? That's very difficult. But they have to realize that you have to go back to something that you were confident in before. I mean, you might have been the captain of your volleyball team. You may be great at basketball. You may be great at even making lemonade at a lemonade stand, first one on your street. So you have to understand, when I was confident in something small, what did it feel like to be confident? How did I express myself when I was confident? And then you take that confidence, the way you express yourself, the way you feel, the way you spoke, and now you realize, hey, I was there before. I can mimic that again, even in an area that you're not confident in, number one. And then people look at, well, I'm not confident because the system's too big. How can I be confident at real estate investing? How can I be confident at doing sales? The fact is, everything has to be broken down into systems.
Right.
So, go ahead.
Yeah, no, I was going to say that this is about 15%, and we're going to do this in like 100% increments, right? So this is about 15% of the actual system.
Exactly. It's the first 15 top percent, that confidence level. And, sadly, a lot of people think that 90% of it is the math and the location. Right. And if you think it's the math and the location, then you make that the issue. If you think it's the price or the investment amount of money or the math or the location, then that becomes your reality. Now you have to fight that reality because it becomes their reality. So a car is a very complex thing. It looks like a car, but it's broken down into multiple systems. You have a fuel system. You have a cooling system. You have a braking system, a steering system. Each of these systems, once you understand each part, there's a confidence in seeing how they all come together. So if you're investing and you're looking to do something that you want to raise money for instance, you have to break it down into its systems and see how they work with each other. Not necessarily how it works. You don't have to know how a fuel system works. You just have to know that you need fuel to be able to go with the accelerator to actually make the car go. And by understanding the bigger picture, I think you begin to grow confidence.
Right. And you know what? You touched on something that I thought was really important as well, too, is, the numbers or the location. And I remember when I used to sit down with a potential JV partner and we were having lunch or dinner or whatever it was. And in the beginning, I was pitching them the performa. I was pitching them the deal. And what I realized, once I took that out, it overcomplicated things for them. Because now, instead of them looking at me and me giving them the confidence to invest in me, they were now shifting to this spreadsheet. And they're like, okay, well, what's this and what's that number? And so you gotta, what I started doing was, then I removed that, just talked about what it was that I was doing, where I was investing, how I was doing it, gave them the confidence about me. And then as I left, oh, hey, by the way, here's a deal that I'm looking at right now. Take a look at it and take it home. And so then I moved it from the performer to me.
See, that's a great example. So I taught college for about 10 years. And I remember when I was a new teacher, I knew my stuff, but I made the mistake to, when I answered a question, I said, hold on, what's that, class? I went to the drawer, opened it up, pulled out the teacher's manual. I double-checked my answer, and then I was right, put the manual back, and I started speaking. The next day, I answered a question, and then somebody said, can we check the teacher's manual? Which means I turned my authority over to the teacher's manual in front of that class, opening up the door for them to now want to question me by talking to the manual. When the dollar, the value, and the numbers become everything, you've just turned yourself over to the numbers. And that's a pretty big battle to fight. So what you just said there is true. Makes a lot of sense.
Right.
You know,
how do you get that knowledge, or what other ways are there of doing that and building that confidence?
So, I mean, personally, I'm able to break things down into its parts. And if you're not sure how the parts work, you have to find somebody who will look at a deal and break it into its pieces. For instance, if it's a land development, we all know that you have to buy the land, and then you have to structure the land. We know you have to site plan approve the land, get your permitting done. We know you have to then do your underground services. And we know you have to do your basement. Then you have to then go vertical. And then you have to have a system for renting it, or let's say selling it, or managing it. So these are all different pieces. And if you're confident of what each piece does by having experts tell you about that, or you can see it in the real world, then with that bigger scope of things, that's what helps build your confidence in whatever you're doing.
What about mentorship? Because a lot of times, and I know in the beginning as well too, and especially coming from the corporate world, so a lot of people are probably listening to this and they're in the corporate world, and they hear about, well, maybe I should hire a coach or I should get a mentor. And it's not until you get into the entrepreneurial world, I think, you realize how important that is. And I look back at the amount of money that I've spent on education, mentorship, having that coach. It was difficult in the beginning, but now I look back and I'm like, man, I would double it, because it advances your learning curve so much quicker, and that coach can allow you to move away from those pitfalls that you're most likely gonna fall into.
It's true, but we have to make sure that you have the right coach, someone who knows how to coach, someone who has the education, and someone who doesn't depend on the fact that they have super knowledge as their stabilizing factor. Because subconsciously, they don't want to tell you everything, because it makes them less of a genius. At the same time, some people are just high level. You have to be able to break it down. So I think a coach that can take you right to the ground and show you a thing, like you guys do, for instance, these tours, where you take somebody into a property, you walk them through it. That's a whole different ballgame than sitting there just speaking on the internet with somebody, which is okay. But you need to have that. It's funny. I was talking to a young gentleman yesterday, and he was saying to me, oh, yeah, I want to buy 5 houses a year. And it's so much money, right? He's telling me his goals. And I said to him, you know what? I get that. If you make the number the goal, what you should look at is, how am I going to live, or how am I going to look if I were to have those 5 properties? Which means, how much more time am I going to have, right? So what is the benefit of your value as opposed to the dollar value? And I said to him, it's okay to set big goals, but your big goal should be like a racetrack. You know where all the curves are. So you know that if you're going at 140 miles per hour, you know that you need to slow down. So a coach can help you know where the corners are, and you're coming up to those corners, and you can sort of slow down, because some people get into real estate and they hit the pedal to the metal, and they're driving corners at 280 miles per hour.
Yeah.
The coach lets you know, back off, ease up on that trigger, Charlie.
And so you also bring up another good point because, how do you know who's the right coach, or how do you find the right coach? And during COVID, there was a lot of coaches and there was a lot of gurus that came out of nowhere.
Yeah.
How do you spot a good coach from a bad coach?
I find if you're hearing things that are original, not always just the same thing over and over and over again. And if somebody has some original thought, meaning it could be something you've heard before, but they bring a new perspective to it, and they always seem to have their own perspective, I think that's important. Because there's so many people who say the same things all the time. And I've been doing this for 41 years.
That's a long time, Matthew.
Me going to a presentation, I'm like, I heard that in 97. Yeah.
Right.
I heard the exact same statement in 82. Oh, yeah, I heard that in 2007. So after a while, it's like, no, take it, put your own flavor to it, and bring it back again. So super important. And if you can see that in people, coaches that are putting their own spin to something, I think that's even a better coach because they've thought about it, they've deliberated on it, they've advanced it.
Right. Yeah, and I think you do a really good job at that.
Thanks.
Yeah, really good.
Thanks.
Okay, so I want to move on to educate, which is 5% of the deal now. So let's touch on that and how does somebody use that to their advantage?
So people don't seem to give themselves the credit for what they've learned. So you learn something and it's like, well, everyone knows that. But you have to give yourself credit for what you've learned because you didn't know it a year ago. And there are people out there who are not even in your same position. So first of all, you have to have confidence in what you've learned. Secondly, you have to always share information. So when I'm talking about something, I'm going to give some information. Like we were speaking about Hamilton, Ontario before, and instead of just talking about Hamilton's a great place to invest, I said to you, when you look at Hamilton, you know what I see? When you look over the top of the escarpment, people see the factories. I see freedom. Freedom. The end of the Underground Railroad, 150 years ago, slaves came up from Atlanta all the way to Hamilton. That's where they ended up. So to me, looking off that edge, I'm not looking at depression. I'm looking at freedom for the first time. And for me, it was a financial freedom anyway, because I was working for a company.
Yep.
I was working super hard, just like you, in an advanced form of slavery, thinking I was making like a lot of money. And so you see, in speaking about Hamilton that way, not just start off with the numbers, the GDP is this and this is that. I'm giving you a story. I'm educating you about something. And history is believable. Jarvinsky Center used to be Henderson's Hospital. Henderson was the first female counselor. And now there's a Henderson's ward. So sometimes when you throw something in like that, people begin to live the city, experience the city, easier for me than just saying it's got a GDP of this and it's got growth of that. All that is there. It's in the background.
Right. And you know what, Matthew, you do such a great job with that because what you're doing is you're taking information, data, numbers, and then you turn it into a story. Because when you can tell somebody a story, I find that it penetrates so much easier and quicker because now I think of Hamilton and I think about the story that you just told me and I'm like, hey, that's a good reason to maybe invest in that area, but let me dig a little bit deeper because now that story now relates to Hamilton as opposed to just numbers and data and stats and information.
Exactly. And all those things are important, but those things are not sexy. It's not memorable. It doesn't make someone want to be in an area. If you told me the recipe of a pizza pie, it doesn't make me want to eat that pizza. But if I know that you mix 3 different cheeses, ones that, let's say, release its taste at different flavors, and if you put a little bit of garlic along the outside of the crust, and if you shred the pepperoni so that every piece of pizza has pepperoni, and the sauce, my God, the sauce.
Right.
All of a sudden, someone wants to eat that pizza as opposed to, oh, by the way, pizza has this, and it has this, and it has this, and it has this, and you know what? I'm so smart.
Right, yeah.
They have to live the investment.
Yeah, for sure.
Yeah.
It also reminds me as well, too, like when I first moved into Peterborough and now having to paint that picture of why they should invest in Peterborough. But it wasn't just only this, because a lot of people were a little bit hesitant of where it was and the location.
Right.
But like, yeah, but listen, it's a gateway into the Kawarthas. And you've got the lakes up there, and you can get a sea-doo, and maybe you can even get a cottage. And so you start painting this beautiful picture of not just Peterborough, but what else is around it.
Yes.
And then, okay, now we can dig a little bit more into the numbers and the data and why Peterborough makes sense from a financial or investment standpoint.
Yes.
Right?
That's exactly it.
Yeah. How else do you educate yourself, or how else do you educate your potential investor?
Well, what I do is, in my spare time, I spend time looking at aspects of my life.
Yeah.
Things that I succeeded at or things that I failed at. And I'm talking non-business things. And then I create stories out of them. Yeah. And the story to me is like an egg. An egg has a shell, which is the purpose of the story. Mm-hmm. Like, for instance, I can tell you that when I was in grade 7 and below, no one ever chose me for baseball. I was never picked. So I thought people didn't like me. Mm-hmm. Right? They never picked me. They didn't like me. Then in that summer, I grew to 6'1". I haven't grown since then. So people were picking me. They were picking me because I couldn't hide from the back. Right. I mean, I used to be in the back. That's why they were not picking me, because I was hiding. Didn't realize that. But when they started picking me, I realized, wait a second. They're picking me because I'm actually present. And then because I was present, because they chose me, they had expectations that I had to be good. I had to go and practice to be good. Mm-hmm. And I realized that, guess what? You have to be present. So that's a little story. The egg shell is the leadership. I learned leadership. The white of the yolk is the situation. They never picked me. They must not have liked me. The yolk is, well, I grew to this height. All of a sudden, they're picking me because I couldn't hide myself anymore. And the germ is, hey, you know what? The germ's that little black thing in there. Hey, you have to pretty much be present in what you're doing. And then the egg has a little bit of liquid in there. Mm-hmm. That's now me saying to the person, have you had that experience? Because if I said to you right now, have you had that experience? You're going to tell me you have. So I've just made a connection with you as a human being, showing you that I'm a leader without saying, oh yeah, I'm a leader. My resume says I'm a leader, right? It's about having little tiny 3-minute stories that you kind of pop up every now and then, which then place in the person's mind leadership, fearlessness, brave, precise, exact. What he says he's going to do, he does. Mm-hmm. So, in the past, we didn't have books and we didn't have writing. People drew things in caves and they told stories, right?
Yep.
That's how they transferred information over the last 10, 15,000 years. So we're too smart for that now. But I always just use stories.
Yeah.
Pictures.
You know what that reminds me of as well, too, just listen to what you just said, is that the process of, and this is where you're tying the confidence and the educate, is that you're learning, then you're doing, and then you're teaching.
Exactly. So that's the little eggs that we create. And I'm doing that in my spare time. I come across something. Why did this conversation why did I just fail here? And I'll think about it. Why did that work and it didn't work before? Think about it.
Right.
Yeah.
And then when you're teaching, what percentage of it would you say are you teaching of success and the mistakes that you made?
I would say it's probably 60% the mistakes and about 40% of the successes. But I never end a mistake in a mistake. I always have to rise as the phoenix rises from the ashes. Mm-hmm. So I never say, oh yeah, I failed at this thing and I failed and it was terrible. I then say, but I took that failure. I bought a building. When I was a young investor, it beat the heck out of me. When I was a midterm investor, it beat the heck out of me. When I was an expert investor, it beat the heck out of me. And I sold it, still made some money. But the bottom line is I learned how to do environmental cleanups on that property. I probably learned a large percentage. So you see how I'm taking that negative story and I have redemption? But if somebody goes around and says to you, oh yeah, I got a throat ache, I got a backache, I got a leg ache, my eyes hurt me, my head hurts me. Like, what is that, for pity? I get it, you're in pain. But why would I want to hang out with you if you're in pain all the time? See, I'm a nice guy, but I'm not that nice.
Yeah.
I mean, if someone's coughing, I feel like, hey, maybe I'll put a bullet in them,
Right.
So in the end, that's a joke, right?
Right, yeah.
So again, I don't mind teaching the negative aspect of it, but you must have redemption in it, or you leave the person thinking you're a loser.
Yeah.
And nobody wants to be with a loser.
And when I think back to the newsletters that I wrote the ones that had the most opens was the ones that had that catchy title of "Here's how I screwed up again,"
Right.
or "Here's where I messed up again." And as I was writing it, at the end, I would tell them what I did to get out of it, or what I'd learned from it, or how I recovered, or whatever it may be. But it started off like, "Oh my God, dun, da, da, da," and then you find Superman gets is triumphant, right? So okay, so let's move on to limiting formulas, because I think a lot of times too, when people are presenting their deals, they think the more numbers, the more data, the more spreadsheets, the more tabs at the bottom of that Excel spreadsheet is what is going to sell this deal.
Yeah.
Let's talk about that.
So it's important to have documentation with all the numbers in it, but we can't lead with that. Our first sheets should not be that, because if you look at your car's doing more than 21 calculations. But if you had 21 dials across the dashboard, how effective would that be? That would just confuse you. And if we lead with all these numbers, because we think numbers are important, and we're superimposing that onto somebody else, and maybe they might think it's important too, but if we agree with them, that becomes reality. So your dashboard only has 4 things on it, really, when you think about it. It's got the speedometer, it's got the gas gauge, it's got the RPMs, the tap, and it also has your the battery. But of those 4, I have to figure out what's the most important. See, the gas is important, but I have more control by looking at the speedometer. I can get a longer, or I can go longer with a slower speed than a faster speed. I can keep the revs down or increase the revs by the speed itself. So basically we have to pick, of the 21 things, what are the 4 that's the most important? Then what is the one that's most important? Because now I make that the most important number, like it might be net operating income.
Yep.
And it has to be a number that you can control. I can control the net operating income by increasing the revenue, because net operating income is revenue minus expense. So I can increase the revenue. How can I do that? I can rent lockers. I can rent parking. I can put a sign on the property if the bylaw allows it. I can put a pop machine in there. And then expenses, I can bring those down. So when I created just the one major number and I let the investor know about it, they now feel as though they have some control, because I have control. 21 numbers gives them no control.
Right.
One number gives them more control.
Yeah, I like this. And so this here now makes up, and I should have started off with this as well too, about 20% of the sale.
Yeah.
So confidence 15, education 5%, limited formulas 20%. Okay, so you talked about NOI. What is another one that you like to have on that dashboard? And I love that methodology as well too, because I think it makes so much sense, because when you take a look at your car, there's so many different moving pieces, but you don't want all that data on your dashboard, because you just be like, okay, well, what do I pay attention to? So when you get it down to 6 or 7, it's manageable.
Yeah, so if I'm buying a building, obviously I want to look at the NOI, because it allows me to compare different buildings without looking at the cash flow.
Yep.
Cash flow is dependent on a person's mortgage. Second thing I look at is price per unit.
And NOI, just in case somebody's brand new, net operating income.
Yeah, so net operating income, revenue minus expense. The cash flow is net operating income minus your debt service, your mortgage.
Yep.
So I look at the NOI, I look at the cash flow. Am I making positive or negative cash flow? That's important to me. I look at price per unit. Am I buying this? It's $1 million. I'm buying it for, let's say, I'm buying a 10 unit for $1 million. That's $100,000 per unit. There's a 10 unit down the street that's trying to be sold to me for $1.5 million for 10 units. So why is it $150,000 per unit? This is $100,000 per unit. So NOI.
Yep.
Cash flow. I look at cap rate. What is the cap rate of the area? That's not something that we can teach right now. What is the?
But high level, what would you say that is? Like the higher the cap rate, what does that mean? The lower the cap rate, what does that mean?
So the higher a property's cap rate, then the more cash flow you will get, because it's obviously giving you a better return, right? Keep in mind that that if a city has a cap rate of, let's say, 4%,
yep,
and you're buying a building at 3%, you're technically paying a little bit too much. But if a city has a cap rate of 4% and you're buying at a building's cap rate at 5%, then that's a better price. So I'm just going to say that a city has a cap rate. People don't realize this. And a building has a cap rate. And we compare the two. The area is 4%. I want to buy above 4 if possible.
Right.
Sometimes you can't. And the further above 4, the better it is for you. If you're buying at 3 or 2, which is below the cap rate of the city, there better be a reason for it. It might be that there's just great cash flow, or it's just great opportunity along the way.
Maybe more turnkey.
Exactly.
Right.
Exactly.
Okay.
Yeah.
Well, yeah. And what else is there that you look at that you want to see in your dashboard?
I look at something called cash on cash. So how much money am I taking from my pocket to put down on the property? How much money am I putting down to close the property, like a closing cost?
Yep.
Versus at the end of the year, what is the cash flow coming into my pocket? So if one hand says I'm putting out X amount of dollars, and the other hand says I'm bringing in this much money, am I bringing in more than I'm putting out?
Right.
In a sense.
Yep.
And of course, return on investment. Am I making a good return on my investment?
Right. So are you more concerned with return on investment or return of investment, or both are important to you?
So I'm more concerned with return of investment, but the most important numbers to me would be NOI, price per unit, and cap rate, as well as cash flow. Cash flow depends on who you are and where you are. I've been in the game for a long time. I have other buildings that I co-own. We make lots of positive cash flow. I don't mind buying a building that's negative $5,000 a month because I have other buildings to take care of it. And basically, it'll become positive in the future. But when I started out, there's no way I can buy a building that's negative $5,000 a month if I'm getting paid $6,000 a month, right?
And to break that down, the reason why you may do that now at this stage of the game and where you are in your investing career is because you are now, which may be something you might add to your dashboard, which would be opportunity. Yes. So you see an opportunity there. Yes. And let's touch on that. Like, what type of opportunity would you be looking for, or would you see in that building that would make sense for you to want to purchase it? So
before, I used to look at this, the speedometer, because I was moving faster.
Yep.
When my daughter came along, I look at the gas gauge. I don't want to run out of gas on the highway. So as I'm further on in my life, I'm not looking for, super active properties that make a lot of money. I'm looking for something to be around for the next 5, 10, 15 years. You see?
Right.
So I'm looking for something that has, let's say, good bones to it, a solid property. I'm looking for something in an area that obviously is growing.
Yeah.
I'm looking at who can I get to manage that property, and what is the strength of that management? Because sometimes, you're a doctor and you're a straight A student, and you just put about $6 million into a property, and the student who's the C student, and I was a C student at some point in my life, is the one who is turning your $6 million into wealth. So you have to make sure that that C student or D student or F student has the proper assistance so they can take your opportunity, do something better with it. People don't think of the property manager. They look at the property managers as something on a lower scale. To me, the property manager is the most important person.
Yeah.
And they have to be good at what they do.
Yeah, property manager and also your contractor as well.
Exactly. And they have to be tough. Yeah. Have you met Lena Gerges?
I have.
Yeah, she's pretty tough.
Oh, yeah. I've had her on the podcast a couple times now, yeah.
Yeah, I mean, she's a great person, but she's pretty tough, right?
Yeah.
So you want someone who's got a little bit of edge, right?
Yeah, for sure. Yeah, she runs a tight ship. For sure. She
scares me.
Yeah. And so what else are you looking for in an opportunity when you look at a building? Like, would it be, separate meters? So if it's not there, you want to now be able to put those meters in. What else are you looking for?
Yeah, I always want to separate the meters. Yep. I'm looking for the ability to add new units to it, or add, let's say, a profit center. Like, can I put lockers in the basement? Can I put a sign on the outside? Can I put solar on the roof if possible, or some way to tie energy back into the system? I'm looking for, if I can avoid balconies, I would do it, because there's always a major cost to balconies. Now, you have full cantilever balconies, ones that stick all the way out, right? I would prefer ones that are halfway out and halfway in the building. They're easier to maintain. And, obviously, I'm looking for, like the parking. Am I able to charge for parking?
Right.
But to make money, people don't realize this, it's about how you save money. So I look into the system and I look at how do I armor my building. In other words, where are the areas that are going to be most used? Well, faucets, anything that's touchable, movable, that someone's going to be there all the time, like the entrance, the the kitchen, the washroom.
Yeah.
I toughen the things that can break. The bedroom door, solid wood, in case a couple of fights.
Yeah.
One locks the door, one wants to kick a hole in the door. Like I have had over 860 units, tenants. And I would say every month I'm changing doors because hubby is kicking a hole in the bedroom door.
Is that a common thing?
Well, for me it was.
Yeah.
It depends on where you are. So guess what? Those doors are solid wood.
Right.
Break your foot. I'm okay with that. Learn a lesson, right?
Yeah. And then I think there's one last piece I think that you also like on your dashboard, which would be your debt coverage ratio.
Yes.
And what is that?
Well, I want to make sure that if I'm receiving income,
Yep.
Cash flow, I'm able to cover what I owe. And in the end, that's the most important thing, because as I did say in the situation today, I can buy something that's not covering that because I have other things that are covering it. But for newer investors or mid-range investors, you always have to say to yourself, can I cover that debt? And by the way, if you want to get a mortgage from CMHC or any major bank, they want to come in and see that you have a ratio that you're actually covering debt, or else you will not get financing from an institution.
Right. And this is where they really, when you start getting into that multifamily space, they're not looking at you, they're looking at the building.
Right.
Yeah. Okay.
No, it's true.
Let's move into the next piece here, which is finding a new level of investor. And this is about 40% now of the deal. So what are we at here now? So we're at 60, 80. Okay. So 40% of the deal here. Where do they find a new level of investor?
So about 15 years ago, 16 years ago, I thought to myself, you know what? I find investors by going to meetup groups, which is great. But you meet a lot of people who are new, or people who have 1, 2, or 3 properties, and they need their money back, right? They need to get positive cash flow. They need that money turned over within a year or two, and that puts a lot of pressure on me. Now, if I go to the expected people, the dentist, the doctor, the person who you expect has money, they've been called upon so much, and they're not the best investors, that they've lost a lot of money, that it makes it difficult to work with those two realms. I found that I raised most of my money from the person that you would never think of going to, but the bedrock of our society. So the person who fixes refrigerators. I'm talking about a company.
Yep. That
it's a mid-sized company with probably 3 to 8 employees. The owner fixes refrigerators, does HVAC, paves roads, builds bridges, fixes elevators. So all the, fixes diesel engines. All these people that you don't really think have a lot of money, these folks, what they have is a bad back, because from 19 to about 42, they were doing the business, and now they are owning the business. And they're busy trying to train people to continue in the business, but their sons and daughters are never going to be there. The problem is, those folks need someone to, let's say, take over their business at some point in the future. But once that business is sold, how are they going to make money? The good news is each of them have about $1 million in their bank account, $1 to $2 million sitting there, where a brand new investor may not have. There's nothing wrong with meetup groups. It's amazing. But again, I don't think there are that many people with $1 or $2 million sitting in their bank account when you go to an investment group.
All right.
But these people have $1 million in their bank account. They have probably $3 to $4 million of retained earnings in the business. They're trying to get that money out. In some cases, you can invest that money and take the returns from it. And they're accredited investors. Their houses have been paid off, and they're transactional, meaning they own a business. They get it when there are delays. Yeah. So what I do is I approach these companies, and I talk to them about their building. Hey, you know what? I'm wondering if you're looking for a new building, because I'm an investor, and I'm looking to buy a building like yours. Maybe I can put you on to somebody else, like a realtor, who can help you find a building. And mostly they'll say to me they're not interested in that. And I'd say, well, I'd love to talk to you a little bit about real estate and investing. And pretty much here's what I do. And when I speak to them, they then come to a conversation with regards to, okay, well, that's what you're doing in investing. How can I be involved?
So you're actually going to these buildings.
Yes.
Now, I would assume
to these companies, yeah.
The companies, or are you going also to the buildings as well too, like the multifamily buildings, or no, you're going more to corporations? Like
yes.
Yeah, okay.
So these companies are like for instance, if you're in Vaughan, between Highway 400 and let's say Kiel or Jane and Kiel, there's a whole bunch of warehouses or warehouse type industries. And no one goes in there and talks to these people.
Right.
You know, you show up and you sit down, you want to talk to them. It might even be, hey, I want to interview you. You have a business. I'd like to do a quick interview, which helps me. And by the way, I'm also an investor. And you have that conversation and you begin to realize that they want something outside of what they're doing to keep them a little bit more excited.
I like that.
And by talking to them about opportunities that I have, like for instance, here's an apartment building that I'm looking to buy, and you know I need some funding or financing. After you have a conversation with them with regards to who they are, you move them towards being the person who puts that $1 million into your building, or they take on the mortgage as a JV partner. So I'm going to say to you that most of my people that I raise money from are people just like that, and no one talks to them.
That's amazing. And and especially in this day and age, I mean, you can just walk in there, you can get one of those little mini mics, and you can literally do like a 5 or a 10-minute interview with them and say, hey, you know, I'm going to put it on my social media, give your business a quick shout out. Once the mics are off, hey, listen, so by the way, I'm a real estate investor. Here's a great, you know, talk a little bit more, and here's a great opportunity. If you're interested, let me know. Yeah,
and at the same time, too, people who own businesses, they got there in 3 ways. Number one, they always knew they wanted to be that. Number two, they were doing something else, and then a course correction happened and they ended up being something else, or maybe they inherited the business. So if they inherited the business, they all want to say, hey, can I have a minute of my own steam? And they want to try something off to the side, like maybe help me with one of my buildings. Or if there's somebody who always knew they wanted to be something when they were young and they're doing it right now and they're great, they still want that, they still have that curiosity to think, well, you know what else can I do when I'm doing this? And if they had a mid-course correction in life, they get you can do more than one things. So ultimately, people I find are looking for some reason to have some excitement where they have some control. When I say control, these people will come to meetings every quarter. So it's not give me your money and I'll get back to you in 5 years. They want to not be physically involved, but they want to live the lifestyle. They want to try out something new.
And now, how are you, say, wrapping up those conversations? I mean, you know, are you getting their business cards? Are you getting their email address? Are you maybe then adding them to a distribution list and ask them, hey, would you like to see if any deals that I have that I send out, would you be interested in looking at them or seeing them? Yeah,
so a lot of it is me trying to understand who they are as a person. And then I might say, let's grab lunch. I want to introduce you to a few of my friends, or, you know, I want to talk more about this. And then I might grab a card. And then once I've built relationship, and get an understanding of who they are and what they need, then I better understand what kind of investment they want. So I don't launch off with the investments. I kind of get to know them and then move them more towards something. Like a lot of people don't realize this, but you know, if we have this simple seesaw here, when I want money from somebody to invest in my opportunity, that's their money, the most important thing. There's my opportunity. Not so important. And my job is to take them from here to, okay, your money is equal to the value of my investment, and then take them to here that my investment is an amazing opportunity compared to your money. But that is not done through, let's say, logic or conversation. It goes back to what I've used for many, many years. If a bottle of water is $1, and there's a bottle of water, people think that's a lot of money for it. They wouldn't pay $1,000 for a bottle of water. But if I were to take them into a desert and say you have $1,000, 2 days walk, this is the only water possible, then that money is no longer important. The water becomes important. So in a sense, when I meet people, I talk to them about what they're doing. Why did you get into what you got into? How's that working for you? And then they begin to let me realize that, you know what, something in life is missing. And I move them towards the investment is going to provide that opportunity. You know, so again, something is always missing.
Yeah. It's almost like the art of negotiation.
Yes.
You know, and you're getting them to this point of letting them see why they need to do this, as opposed to, because it goes to purpose is stronger than object.
Yeah.
And so what is the purpose of that, as opposed to the building? Like, you know, I talk about this all the time. Like, I don't love real estate investing, but I love what it does for me. So if you can tie the purpose to that object and understand why they need it, you can sell that better.
And you have to be careful not to ask yes/no questions, because if you walk into a space and ask a bunch of yes/no questions, you'll get a lot of no's, and then you're out the door. Even someone simple as a real estate agent who's doing a call back to somebody who maybe filled some information out on a form. Mm-hmm. If they say, "Hi, I'm Matt Frederick. I'm just calling you back based on the form you filled out. Was that you?" That's a yes or a no. Mm-hmm. Okay. By the way, are you still interested in buying something? That's a yes or no. Do you have your own house? That's a yes or no. Are you pre-qualified? That's a yes or no. Whereas I could have said in the beginning, I noticed that you filled information out on 1 King Street. What caught your attention about 1 King Street? Mm-hmm. Which means they're talking. As opposed to, or if I said to them, do you have a house to sell? I might say, if you have a house, let's talk a bit about why you got that house. Because if they tell me why they got it in the first place, now I can say to them, and how's that working for you?
Right.
You see? And that begins to create the process of them telling me that it's working or not working. And then I'm saying, if it's not working for you, based on your words, let's move on. So it's a big, long way to say, I don't go in there and ask a bunch of yes/no questions. I don't interview them, mm-hmm. like interrogate them. Right. People want to tell their stories.
Yeah. Okay, let's move on to the last piece here, which is the analysis sheet. And this is 20% of the sale.
Yes.
Yeah, so let's touch on that.
Yeah.
Now, and I think we touched on it a little bit, which was in the other part where it says limited formulas, mm-hmm. but that was really kind of talking about how to limit it. Now you're getting into this analysis sheet. So is this now the pro forma? Is this where you kind of break it down?
Yeah, we have to break it down, but we have to break it down in a way where people feel as though they have more control. Because people don't realize this. The most unmet need of the human psyche is what's called control over circumstance. Okay. Why does somebody want to be wealthier? Because they want to have more control over the circumstances of their life. Something goes bad, I have the money to help myself, right? So we all are looking for more control. It's like, what happens to me after I die? You're out of control. Like, people want control. So I have to choose and use the numbers that make people feel as though they have control over something. Mm-hmm. And even if it were something as simple as a car, I have to have measures. Remember the dashboard?
Yep.
How fast I'm going, how much gas. That's a measure of the system. And I have to have the control of the system, which is the steering wheel, the accelerator pedal, and the brake pedal. So whatever I'm going to show you that I want you to buy or invest in, I have to show you that I have the way to look at the proper measures, not all 21, but the proper numbers, and so I can see what goes wrong ahead of time, so you feel as though now I'm in control, and then I have to show to you that I have the ability to steer the wheel, or mm-hmm. put down the pedal or speed it up. I have to build that into the investment opportunity, because that's what they're looking for.
Yeah.
Control.
And it's almost like you could put like this great dashboard together with those highlighted numbers with green, yellow, red. Right. You know what I mean? Because exactly. So now you break it down even further, because people understand what green, yellow, and red is. Yeah. If they're driving the car, like, well, I got to stop, or it's green, I can go. Mm-hmm. And then now that measures the high level performance of what this building is doing.
Right. Exactly. And if you recall, we talked in the past about people just giving me numbers, and I'm saying, if I have money to invest, guess what? I don't want just the numbers. I want to know how you protect me liability-wise, because I don't want to lose my money. And now show me the tax treatments, because I don't want to invest money, make money, and then it's all gone. And then show me the ways to get out, the exit strategies. So show me these systems. And show me you have control to measure the system and the steering wheel to control liability, the measure of taxes and the control on how to deal with that. The understanding of how do you measure exit strategies, plus how do you control the exit strategy, and then what are the systems in place. And now when you've earned my respect, where you've covered what happens if I fall from 10 stories, now you've earned the right to tell me about the numbers. So again, for people who don't understand what I'm saying about control and measures, if I can show somebody that I have 10 things in the investment to look at, I have the way to measure each thing early on, before things go wrong, because I know which measure to look at. I'm looking at 21 numbers. I'm looking at the right measure, and I have the ability to steer the wheel, hit the brake or the accelerator pedal on that investment subconsciously. That's what I'm dealing with. I'm dealing with their lack of control over the environment. And then they turn their money over. Even if I don't talk about the investment, they start begging me, okay, what do you have for me to invest in? Right? So it's the unmet need of the lack of control. And I show them how I could spot things. Bottom line is, the old canary in the coal mine. Coal has, dust. And if the canary dies, it's a quick way to see that the air is bad. Canary's dead. Let's get out of this coal mine before we die. You have to know the speedometer. And by the way, if you want to get out of the coal mine, you have to have a way to get out of it. So control. So the true to selling or raising money, or you joint venturing with me, is me showing you how I have control and measures of big systems. And I respect the systems, because even the fuel system is a big system, but with a clogged filter, it could affect that system, which affects every other system.
Right.
But if I don't know the systems, then how can I, and I don't know the parts of the system, then how can I have control or the ability to measure it?
Yeah. Control is such an important part of all of that, right? Where, people rarely remember what you said, but they will remember how you made them feel.
Exactly.
And that's part of that control as well too, and also knowing that you've got a strong team around you as well too.
Yeah.
And that's all tied together with everything that you said, on this podcast is that confidence and educating and limiting the formulas and so I think this is a great way for anybody that's listening. Go back and listen to this whole entire podcast again after you listen to the first time, because this is such an important step to grow your portfolio, build that confidence, and build a great wealth building system.
It's so true. And showing control does not come from, let me show you control of the system of what you're investing in, yet. It's in your conversations, you tell little stories about where you showed control or the ability to spot things, where you showed leadership. And then that subconsciously sets the foundation nicely for you. And then you could then move into the opportunity and then show how you have control there too, right?
Yep, awesome.
Because I tell people, when I started off, I was a soldier in the Canadian Armed Forces Reserve. I learned, leadership, obviously. But instead of saying I learned leadership, I give it a quick example of leadership, a situation that I ran into and how I dealt with it.
Yeah.
Just in the conversation.
Yeah.
Subconsciously, it transfers over.
I want to kind of wrap it up with the last maybe few minutes here with maybe some of the best advice or best quotes that you've heard over the years that's really helped to shape your life. Do you mind sharing some of that with me? Yeah.
It's always going to be fortune favors the bold. You take leadership, you take a position, and it's not given to you. And even if it's given to you, people don't appreciate it. So fortune always favors the bold, which means the bold step out and do the things that are, let's say, look and sound impossible, the most fearful things. I was a kid, and I read a story at Sunday school, and let's say God tells Joshua to take a city. They see giants and they run away. 40 years later, that's a waste of time. Now, whether that's a true story or not, I'm just saying we have to act upon the things that we're most fearful of.
Yeah.
Another thing is your wealth sits beside your greatest fear. My greatest fear until I was grade 12 was public speaking.
Yeah.
I've made most of my money. Well, I've made a lot of money being able to speak to people to cause them to invest in opportunities that I have, and also train people, because sometimes in the process of training people, you train people and you have great partners.
Yeah, I love that one. It's so true. I mean, and I think I even talked to you many times in some of our sit downs. I'm like, man, how did you get over the fear of speaking? Because it was a big hump for me as well too. And I think, it's the greatest fear for most people is public speaking. But the only way through it is to conquer it is through it.
Yeah. So really, in the end, whatever is your most fearful thing, beside it sits your wealth. Yep. If you're willing to challenge yourself to better yourself at that thing.
Yeah.
And that's something that I've seen.
And I think that's where your gift lies. You know, is being able to chisel it out and work hard at it, and to see the accomplishment that you are able to achieve by doing it and pushing. I mean, I remember so many times I'd come home like, Dar, fuck that, man. I ain't talking in front of anybody ever again. I'm done. I'm tired of my shirt being wet in my back and my wiping the sweat off my brow. But you just keep pushing through it. You keep pushing through it, and it's 10,000 hours.
Yeah, I've seen thousands of speakers over my lifetime, and I always enjoy hearing you speak. You know, I learned something from you. I like your perspective. You know, you have a great voice, and you present well. So, I mean, for you to say to me back in those days that it was a fear for you, I'm like, what the heck is he talking about?
Yeah. You know, and it was something that somebody had told me one time when I had to do, well, you came to that event when we had Les Brown down.
Les Brown, yeah.
Yeah, and the weekend before that happened, somebody asked me about it. I go, man, I am so nervous. I got to introduce Les Brown on stage. And she goes, oh my God, I can help you. And I go, how? And she goes, the chemicals released in your body when you're nervous or when you're excited is exactly the same thing. So instead of saying you're nervous when you go on stage, just say you're excited. So now I say, man, I am so excited to be here. I am so excited I could actually maybe even pass out. But it's still the heart rate is still there. You're ready for peak performance, and that's what your body is doing for you. And so it's not running from it, but just realizing what's happening and then changing. This is where the mindset's so important, is changing your mindset and the way that you react to the feeling that's happening in your body. Like, oh, I know what this is. This is excitement, not nervousness. I'm getting prepared for top performance.
It's true. And then lastly, being humble enough to take counsel, like listen to other people's advice without getting upset. And then at the same time, judging yourself. When I say judging yourself, taking a look at what you've done and say to yourself, what can I have done wrong? What could I do better? Now, I'm humble enough to do that, but I'm not a humble person. I mean, my daughter used to play soccer, and there's this one soccer dad who would scream at my daughter. Trust me, I wasn't humble, right? You know? But, you know, when I see things like that, but I'm just saying you have to be humble enough to listen to other people and then listen to yourself and try to see if you can solve your problems. Yeah. And then write them down as stories so you can teach others.
Yeah, absolutely. Yeah. Couple more things and we'll wrap it up. Yeah. What's the best and worst day that's happened to you? And how did you...
Worst day. I can't think of a worst day. Oh, yeah. You know what? I didn't pay my taxes. So back in 2007, I filed income taxes incorrectly. Yeah. You know, everybody is innocent. You know, they think that it was a mistake. Guess what? Not for me. I didn't make a mistake. Yeah. I'm terrible. But, you know, you make $1 million or $2 million speaking, and you give up $1.1 million in taxes. I didn't have the maturity to handle that and see the bigger picture, that our country has liberty, the ability to actually do things, whereas a lot of countries don't have liberty. So I don't mind paying taxes because we have liberty. But I didn't pay them. And then, like, I think 7 years later, they came knocking on my door, and I had to admit, okay, yeah, you're right. I didn't do it. I'm wrong. I paid my due. It's embarrassing. I'm a terrible person. Paid the extra. Funny enough, I spent so much time talking to them. They kept saying to me, stop bothering us. Like, people hide from us. And, the lab rat, they fell in love with. And they actually gave me a pretty good deal. So that was probably the worst thing I've done in my life with regards to business, not following along the tax road correctly.
Yeah, they actually came back 7 years later, right?
It was like 7 years later. They came at me. I'm like, oh, my God. I thought I was almost out. Almost out of it.
What's the best day?
Yeah. Best day, I think the best day is when I bought my first commercial property. They were asking $1 million. I got it down to $680,000. Wow. And they gave me a VTB of $500,000. And I thought, wow, 7-year, $500,000 VTB, I think 5% interest, a lot of land. I'm incredible. Yeah. Wow, incredible. Of course, that was the worst property I've ever bought in my life. Right. 7 years later, it was polluted, and it was killed me from when I was a young investor, middle investor, and an older investor. But lessons. I learned a lot from it. Yeah, good lessons. So that was the best day of my life. I'm like, look at me. I remember walking the property with my hands up like this. Right. I did it. But they gave me this amazing deal because there was polluted land, and they didn't want me to go to the bank, so they gave me this full VTB.
Got it.
Because if I went to the bank would say, do a phase 1 environmental. And I was going from residential, which I had lots of, to commercial, thinking I didn't need any extra trading.
Right.
I knew it all.
Do you still have that property?
I sold it for about $1.8 million.
Nice.
Yeah.
That's awesome.
Yeah, I made money on it, but, again, by the time I put stuff into it, I probably broke even.
Yeah.
Yeah.
Matthew, listen, thank you so much for your time. Thank you so much for your expertise. As always, if anybody wants to get a hold of you and learn more about you, how can they do that?
My email, Mathew with 1 T, so MATHEW.F at rccsol.com, or Instagram, rccsol.com. No, sorry, rccsol.investor.
Awesome. Matthew, thank you so much. And we'll do this again.
Sounds good.
All right, brother. Thank you.
Okay, bye.